Welcome to the lecture, What is Bitcoins and Altcoins? We're going to do a very quick explanation of everything to do with cryptocurrencies, just the basics, just enough so that you understand what we're looking at. We're not going to be going into things that are irrelevant to you. We're going to keep it as relevant as possible, and we're going to try and move quickly through the fundamentals. Bitcoin is many different things. This is why it's often hard to define exactly what it is when we get too complex, when we start to get very detailed. So Bitcoin, when it was created, was innovating in cryptography. It was innovating as a communication system. It was innovating as a financial asset. All these different dimensions for innovation made it very difficult to explain what it was. So we can talk about how Bitcoin was a distributed network and how the whole function of the network is to ask the question, who owns how much Bitcoin? And the entire network, having no central authority, its only task is to figure out who has so much Bitcoin, right? And to keep it as secure as possible so that no one can tamper with it. We can go into the nuances of why that is the way that it is. However, knowing that's not going to make us any money. And that's why you're here. You're here for the investing dimension of cryptocurrencies as a total. So we're not going to be going into how it works specifically. If that's something that interests you, you can look into that in your own time. But for here, we're looking to make money, so let's get into it. If you look at Bitcoin as a financial asset, over the long term, it has done insanely well. It is the most volatile, the highest performing asset of all time. If you plot it against the stock market for the last 10 years, the stock market has done several 100%, which is incredible. But Bitcoin has done millions and millions and millions of percent. Doesn't mean that Bitcoin was completely without risk though. As we're aware, Bitcoin has gone through several periods where it has declined 70, 80, 90%. And for this reason, everybody thinks that it's incredibly, incredibly dangerous. However, it's reasonable to say that it's not so dangerous if you have the right techniques used to manage your portfolio. But we're getting a little ahead of ourselves. Let's continue to look at the risk parameters of this asset class. So if you were to have a chart where you had risk along one axis and returns along the other axis, you would find that most assets in the world actually follow a linear path through the center, where their risk and reward is fairly equal to each other. You would find that Bitcoin would be very, very far out on the top right-hand corner, and cash would be very, very close to the bottom left corner. Along this line, you would have every other asset in the world. You would have bonds, you would have property, you would have stocks, you would have small caps and other speculative assets, and then you would have cryptocurrency all the way out on the far side. One of the most fascinating things about Bitcoin is the fact that it goes up so much actually makes it more rewarding for each unit of risk than actually most assets in the world, which theoretically makes it more efficient than all the other assets in the world. But this is also a little more complex. It's just interesting to know because it actually makes Bitcoin quite appealing as an asset for us to invest in for this reason. Thankfully, Bitcoin has been around for a long enough period of time now that it has developed into an asset that a lot of people respect and understand. No longer are we in the phase of history where Bitcoin is seen as some sort of dark magic or some sort of speculative asset that has no place in the world. Nowadays, many banks are holding this asset. Many hedge funds are holding this asset. Many very wealthy individuals see it as a core part of their portfolios. And for this reason, and for this massive amount of adoption, this means that you and I have access to a whole lot more tools and materials and research at our disposal so that we can make better decisions. It also means, because it's regulated, that we can buy and sell it and keep it as a financial product, and we don't have to worry too much about the regulations. It's just seen as stocks or any other speculative assets so that we can make money off it safely in the regulatory sense. So moving on to altcoins. The term altcoin was originally created to denote anything that was an alternative to Bitcoin. However, nowadays we know that there are no such things as alternatives to Bitcoin. Bitcoin is the one and only granddaddy of all cryptocurrencies. There very well may be no alternative to Ethereum either, even though Ethereum as a smart contract chain is under attack by lots of different other smart contract chains, trying to look for market share from Ethereum. No, none of them have succeeded yet. Ethereum has maintained number 2 position for several years now, and it doesn't look like it is slowing down anytime soon. However, the jury is still out on that, so until then, Bitcoin is the one that we look at. In the current era, altcoin simply means an asset that isn't Bitcoin or Ethereum. These are any other projects, anything that's small, anything that's speculative, anything that doesn't really have an application, or even if it does have an application. Altcoins is really anything else other than Bitcoin and Ethereum. You'll hear us use the word altcoin often. There is no real specific meaning for that word. It can be used to assign really anything that isn't Bitcoin or Ethereum, so don't get hung up too much on that when you hear the word altcoin being thrown around. One may ask, if Bitcoin and Ethereum are so established, then why don't we just invest in those? What's the appeal of investing in altcoins? You'll find that because altcoins are very small, often, they will have higher returns than Bitcoin or Ethereum. They will go up faster, but they will also go down faster, often more frequently as well. This means that altcoins have a very broad range of returns. They can either be very, very high performing, or they can be very, very low performing and incredibly dangerous. Because of this spread of returns, we can actually use them as alternative investing vehicles when we have a lot of analysis on something like Bitcoin. For example, when Bitcoin is going up, you may choose to hold more altcoins to increase the performance of your portfolio. Then as the market starts to turn down, you not only sell all of your altcoins, but you sell your Bitcoin as well and raise more cash to protect yourself. These are the types of techniques and tactics that we look at deploying in this university. So it's very important to reinforce this point that holding altcoins is no such thing as a free lunch. Everything is very highly correlated to Bitcoin. This means that if you look back in the past and you see that your favorite altcoin has gone up several hundred of percent, it's not going to be as simple as repurchasing that coin and then doing a whole bunch of feverish research on it and being like, oh, well, people are adopting it, or there's a reason why it's so good. The reasons don't matter because everything sticks to Bitcoin, everything follows Bitcoin. The whole market moves together. So the only use of altcoins is actually just to trade Bitcoin, but with more volatility. This is only for professionals. So if you have a portfolio full of altcoins and you didn't listen to my previous lectures on moving your crazy portfolios out of whatever you hold and into the investing signals, because it's a professional way of investing, you better understand this point. That even if you're holding altcoins, if you hold something that's random or doesn't make any sense, anything that isn't Bitcoin or Ethereum, listen carefully. It doesn't matter. It doesn't matter. The whole market is correlated and it doesn't matter what you hold, it's all going to move in the same direction. So in summary, Bitcoin is a fascinating and a very important piece of history. As a communication tool, it's incredibly interesting and very, very complex. However, we recognize here in the university that you, like us, are more interested in the money-making dimensions of that, so we go very deep into the financial aspects of this asset and we ignore everything else. Altcoins often move up and down in the same direction as Bitcoin at the same time, faster in both directions. This makes it very risky and very beneficial when the timing is correct with the overall market. Here in this university, you'll have the benefit of our research, the professor's research, so that when the market is doing what it needs to do, when it's going up, we will be holding the right altcoins to benefit you. When the market is going down, we will be telling you the right altcoins to get the hell out of so we can protect your money to the highest degree possible. This way, we make money in all market conditions and we outperform everybody.